So the household non-farm and payroll employment was roughly in line with consensus expectations, up 315,000. Household employment was up more than 400,000. Now, we pay more attention actually to the household. And if you look at household employment, it flattened out and actually went down from March until this month. And so from March through August, effectively, it's been flat with this latest 400,000 booster. But if you look inside the 440,000, what you're going to find is that's all part-time, much lower paying jobs. Full-time employment is down. And so that's a problem for the economy. It suggests stresses and strains, more people having to work 2 jobs to make ends meet and pay for food and energy. So that's a problem. And what's also interesting is if you look at the gap between the non-farm payroll employment number that seems to have been, charging ahead, and the household employment number that's gone flat, that's 1.6 million people right there. So there's a huge discrepancy between those 2 measures of employment. And the household employment measure includes many more small businesses, and they often react much more quickly to changes in the economy than do large corporations, which are captured more by non-farm payroll. But some cracks in this report, seasonal factors aside. The unemployment rate did go up from 3.5 to 3.7%. We did have an increase in the participation rate in the labor force, so that's maybe it certainly is one reason for it. The average hourly earnings were up 0.3%, and we now know that they peaked on a year-over-year basis at 5.6% in March. March is an important month here. It seems like a lot of things peaked back then. And now we're down to 5.2%. And still, that's a huge loss of purchasing power because inflation during this time was up. If you look at the CPI, which does include food and energy, up 8.5%. So, more than a 3% loss of purchasing power on a year-over-year basis. The other thing we saw was the average work week ticked down. Most people do not pay attention to this number. It just changes by a 1/10 or 2 per month, up or down. But it often has an outsized impact on average weekly earnings. So those are even worse because hours have ticked down. The other thing to note is that the Challenger survey, which measures layoffs, broad-based layoffs, those are up 30% year over year. This is what I mean. We're seeing all of these headlines, and the Challenger survey suggests they are real, and yet we're not seeing it in the employment report. Initial claims, as I mentioned, having spiked at the most rapid rate going into a recession that we had seen, now seem to be settling down. And that's got me wondering about this seasonal factor issue. The other employment-related number that came out this week was JOLTS, job openings, and they went up. So the skill set mismatch, or companies not paying enough to attract labor, is still impacting the job openings, the number of openings. I think steady state, they used to be 2 to 3 million, and now we're up to more than 11 million. In terms of other economic indicators, retail sales in the latest month and personal consumption expenditures, both flat, and this is in real terms. And auto sales, and I pay a lot of attention to auto sales. It's a big ticket item. And then at a steady state, they're usually 17.5 million units at an annualized rate here in the United States. Uh-huh. So we know because of chip shortages that they were very depressed for a long time. So one would have thought pent-up demand was increasing. Well, chip availability clearly is easing, and yet auto sales dropped from 13.3. Remember, I said steady state is 17.5, and we haven't been there in a long time. They dropped slightly to 13.2. And they probably moved up more because of electric vehicles, certainly more because electric vehicles are booming, and traditional gas-powered cars sales are floundering. So this is a big problem for the auto manufacturers. They're 90 to 95% of their sales are still gas-powered. And so it was curious for us to see GM reinstate its dividend. I think that was Mary Barra's way of showing confidence that they'll be able to transition into the electric vehicle age pretty well. But I don't know. This is a very big shift.